What's going on, everybody? This is Gilberto from Credit Guys, the show where we talk all things credit and finance related. Today's topic is going to be how to correctly apply for an auto loan or a vehicle loan, and when is the correct time to apply for one for the highest chances of approval. If you're interested in this video, please be sure to like and subscribe. And without further ado, let's get into it. How to apply for an auto loan and when to correctly apply for one. Well, you have to take into consideration a couple of different factors. How strong is your credit? Meaning, what is your current credit score? What are you using to monitor your credit to accurately represent and give you that score? And what is your credit profile built up of? So what does that mean? Let's break that down. We want to make sure that before we go and apply for a new vehicle loan, that we are getting, number one, the best interest rates, and we go in with the highest credit score available to us to make sure that we're just getting the best deal, right? Number one, you want to make sure that you're using a good credit monitoring service, meaning that you know your credit score like the back of your hand. One that I recommend is going to be Identity IQ. The link to sign up for it will be below in the description. So using a credit monitoring service like Identity IQ, you'll be able to see accurately any negative items on your credit report. And if you have any, well, then you'll be able to dispute them accordingly, getting them removed from your report and increasing your credit score and overall credit leveraging power. So once you know your credit score, once you know what's on your credit report, you can confidently go in applying for a new vehicle. The thing to look out for when applying for a new vehicle, so there's two things. Is this the first time you're applying for a vehicle? If so, a couple determining factors are going to determine what you get approved for and how much car you can afford. Let's backtrack a little bit and go over what I would personally do if I were getting into my first vehicle. There's two different options. One is you can go directly to the dealership and pick out the car you want, sit down with the dealership, negotiate, and see what interest rates come back and see what the rates are for approval, and rack up a bunch of hard inquiries. The second option, which is the preferred method that I would recommend to everybody, is build a relationship with a credit union. So just to break those two options down, when you go to a dealership, they are partnered with a series of banks that they work with. And those banks are always going to offer a higher interest rate compared to credit unions, meaning that if you go to a credit union, you might get approved for, in today's market, 7 or 8%, right? On the low end. Versus if you go to a dealership starting off, they might start off at 9%, all the way up to 12, 11, 13%. Even if you have excellent credit, right? And that's just because credit unions, they finance directly, so they can give you better rates. The next downside of using a dealership is that they are going to run your credit multiple times, giving you multiple hard inquiries. On the low end, 5 or 6. On the high end, 13 through 15 hard inquiries, which is going to negatively impact your credit score tremendously, right? Because they're shopping around through different banks. If you use a credit union, they're only going to give you one hard inquiry, right? Because they're the ones doing the financing. And it's not going to have as much of an impact on your credit report. Going in through a credit union, you'll basically tell them the ballpark figure of the auto loan that you want. Let's say you have a car in mind and it's 50 grand. So you're going to go to the to the credit union. You're going to give them your financials, right? Your tax documents, a couple bank statements. Make sure you can comfortably afford the car. If you have down payment, tell them that, so they can take that into consideration. But you want to get approved for 50 grand. Okay, all they're gonna do is run your credit, give you a pre-approval. Hey, here's 50 grand. Yes, you can afford this comfortably. The next step is to either go through the dealership or the private party that you're going through with the check from the credit union. Give them the check. There's no, it makes it easier for you in terms of the haggling aspect and trying to shop around and see, what other deals you can get. Because you already know, hey, I got 50 grand. This is what I'm working with. This is what I can get approved for. That's it. No funny business. This is what I want. And so you go into the dealership, you grab the vehicle, they get the check, you drive off with the car. It's a done deal. And on top of that, credit unions can also offer you longer financing terms. Of course, the interest rates will vary, but they can give you 72, 84 months in financing, which over the long run can save you some money as well every month. Versus going into a dealership, you have to go in there, you have to shop around. Let's say let's say you find a car and maybe they don't know how much you can get approved for, and the banks come back and tell you, you can either get straight up denied, or they're going to ask you for a down payment. And on top of that, again, from what I stated, the interest rate is going to be extremely high, and they are also going to maybe not give you the best terms, and they might require a down payment. So again, those are the differences between an auto loan through a dealership and an auto loan through a credit union. One thing to note as well is that typically your next highest auto loan approval will be 3 times prior to what your last highest auto loan was. So let's say you completed an auto loan approval for 30 grand and you want to try and get $90,000 in your next approval. You have to have 2 things, right? Number 1, you have to have the income to prove it, that you can afford a $90,000 car. And number 2, you want to have a low debt to income ratio, as that will have an impact on the approval process as well. So just to kind of summarize today's video, if you're gonna go apply for a new or used vehicle, number 1, go with a credit union, build a relationship with them, just go in, sign up with them, open a little account or get a credit card with them, tell them you're looking to apply for an auto loan. They'll give you the rates, they'll give you a pre-approval, more than likely 9 times out of 10 they will, and that will stop you from getting a hard inquiry up front, and you'll know that, okay, you can comfortably go and apply for a vehicle, and then they'll give you the hard inquiry and you don't have to play around with, trying to figure out if you're gonna get approved or not. Versus the dealership, they just put you through a whole bunch of different hoops that you have to jump through. If you enjoyed today's videos, please be sure to like and subscribe. I'm Gilberto from Credit Guys. Until next time.